So do you know what FUD is? F-U-D? Have you heard that acronym before, Lisa?
I have no idea what you're talking about.
Okay, FUD stands for fear, uncertainty, and doubt. And that seems to be what is going on in the marketplace right now. And we're here to delve in a little bit and maybe address some of those concerns that people are feeling and give the real story behind what is going on in the macro and the micro environment here in northern Michigan. You had the privilege recently sitting in with Dr. Paul Isley, an economist from Grand Valley State University. Why don't you tell us a little bit about what you learned on what he had to say?
Yeah, it was awesome. So he's a very authentic presenter, puts it in layman's terms. And I guess, spoiler alert, the end message was that things are a bit crazy right now because of the news cycle and just a lot of uncertainty on where things are going in terms of some of the things that are happening with the administration, creating a lot of fear, job cuts in Washington, unemployment being up. A lot of things that get clicks in the news outlets are creating some fear in the markets, and we've seen that affect the stock market in the last few days. But Dr. Isley took us through some deeper level looks at what's actually going on in the numbers, and it was pretty encouraging.
So for instance, like I think one of the things you had mentioned to me was how AI is impacting unemployment, right? So there's some changes there that I wouldn't necessarily say it's all bad with the lower unemployment numbers, right? That's because we're operating at a much higher level of efficiency now that AI is coming into certainly the manufacturing segment and some of the management segments, right?
Yeah, so what everybody's trying to figure out is, are we heading into a recession? And one of the key indicators that economists like Dr. Isley looks at is unemployment. And so the unemployment rates are creeping up for the first time in many, many years, and that's usually an indicator that a recession is coming. He says not so necessarily this time around, because the last time we had an unemployment increase that didn't lead to a recession was in the 90s, when we saw huge productivity gains as a result of office products like Excel and Word just exponentially increasing worker productivity. And so those are actually positive unemployment gains. It's a little bit of temporary displacement while workers find other long-term roles. And that's exactly what's happening right now with AI. But I do want to go back to something from Dr. Isley's comments that is, I think, really important. And that is, of course, interest rates. And so another thing that came through at the macro level from that presentation is that the market has already priced in expected Fed cuts this year. So you can see that in the bond rates and you can see it in the interest rates. We might at best get into the high fives, low sixes this year. So interest rates are going to continue to be an opportunity, I think, for us as we watch them improve a little bit. We think a little bit of improvement will go a long way. But ultimately, all things taken together, with home prices nationally still being strong, home prices locally still being strong, demand still being out of whack with supply, Dr. Isley and our projection is we're still going to have a pretty solid real estate year. We just need to get through some of the noise and uncertainty and FUD that we're feeling and seeing in the market right now. So most economists are predicting sort of a settling and into continued settling into what we would consider a normal market with, somewhere between 2 to 4% price appreciation on homes, somewhere in the order of flat, maybe down just a hair in terms of number of homes sold, and more of what we're seeing right now, which is a typical days on the market, somewhere around like that 80, 90, 100 days, which is kind of still really fast compared to historical standards. So we're still feeling really good about the year ahead, especially for sellers. But, some of these things are going to improve the scenario for buyers as well, especially if we do see a little bit of interest rate relief.
Yeah, so on a national level, the real estate market has held fairly steady. Last year was still a pretty positive year on an overall level. We have heard from some of our partners in like markets like Florida and whatnot. We're seeing definitely some softening on what is occurring here in the northern Michigan real estate market. So let's take a look at some of those numbers, how the market is performing so far this year or
Yeah.
year over year.
So some of the fear that we've talked about has definitely caused, I would say, some anecdotal slowing in the market. We sold 97 properties at Winslow Group last year, so we've got a pretty good finger on the pulse of how our sellers and our buyers are feeling and what's happening. And the last couple of weeks, the slowings have slowed down. The number of calls coming in have slowed down a little bit across all price points. And so I spent some time this weekend and yesterday, a little bit early, because I normally do it at the end of the quarter when I have a full set of data, just trying to figure out what is happening in the market. And I was pretty surprised at some of the numbers that I saw. First is that prices are still way up. So far through March 10th of this year compared to March 10th of last year, and there's a pretty good amount of data there, so statistically significant, we're seeing home prices are actually pretty substantially up year over year. So prices are staying strong, great for sellers, not necessarily as good for eager buyers that are in the market. The second thing that we've seen is what we're feeling with our clients, we're actually seeing in the data. So the length of time that a home is on the market, days on the market, before it actually hits the closing table, so that from the time it lists to the time it hits the closing table, is lengthening across all price points. So we went from, I think it was 59 days on the market was the median last year, to 70 days on the market this year. So that's a pretty significant increase, and we're seeing an increase in the number of homes that expired. So 12, and that's homes that don't sell before the listing contract expires and they get pulled off the market. That number is actually up about 20% this year. So from like 12% to 15%, and that's pretty meaningful.
Yeah, we've discussed many times before, it is a slightly seasonal market here, but not as much as one might think.
Mm-hmm.
So, there's some years, and I'd like to look back more at like a 5, 6, maybe even a 10-year study if you're up for it.
Sounds like a future video.
Especially on the luxury segment, because I do recall some pre-COVID years where actually that first quarter was insanely strong in the luxury segment. What were some of the numbers that you saw so far for this year?
I'm so glad you asked. It's extremely strong again this year. So we're seeing a number of luxury homes list. We've seen almost all the, relative to new listings, the closings were right there. Almost everything in the luxury space that's listing is selling, and it's selling faster than what it did same period last year, which is bucking the trend that I just talked about across all price points. Those luxury homes are in those numbers, but when you pull them out, you see it going from, I think it's 85 days on the market was last year's metric, which is a very fast days on the market trend for luxury, to 45 days so far this year. So the luxury home market in northern Michigan right now is on fire. Some of that is fueled by off-market sales.
That's correct, yeah. So often those off-market sales are entered in, might even be same day, and so it's really only shows on the market for maybe one day or only 30 days, and so that can skew the numbers a little bit. We're still seeing a little bit of, I would consider an inventory crisis almost, and that's still sort of what's driving this seller's market still. While inventory actually is up, I believe, on the entire market by about 4%, it sure doesn't feel that way. And if you're a buyer going out looking online, ideally at winslowproperties.com, and you're searching for real estate, you'll find in your certain area, if it's Harbor Springs or Petoskey or Crooked Lake, there's very few properties to choose from.
Yeah, I would agree. And I think, so taking all this together, what Dr. Isley shared at the macro level and what we shared at the local level, I think we have some thoughts around what that means for sellers and buyers, and your situation might be unique. So we'd love to talk to you about it if you're in the real estate market.
So thanks for watching. Definitely drop a like. Leave a comment if you have any thoughts on the Northern Michigan real estate market or the national market, or what you think is going on with the economy. We'd love to hear from you. And then certainly DM us or reach out to us directly if you have a question about the Northern Michigan real estate market.